So first up, guys, this is not a sponsored video. I'm just a huge fan of Bybit who uses them to trade on. If you want a Bybit account, check out the link down below. Using that link, not only will you earn a bonus, I get a bonus too, and you'll get 0% fees for a whole month when you use this link. We're going to move on to derivatives trading. Derivatives trading is great because you can utilize leverage. But with leverage, where you're borrowing cryptocurrency to make more, there's also bigger risks as well. More reward, more risks, and we'll be covering all of that. First up, you've got USDT Perpetual. So this is trading cryptocurrency against USDT. And you also have the option of USDC contracts. So basically the same thing, but instead of USDT, it's USDC. So depending on the trader you are and what you prefer, you may have a preference. The other main difference option here is inverse contracts. Now the difference between inverse and perpetual is inverse is trading cryptocurrency and it's margined with its own coin. So for example, if you trade the Bitcoin USD contract, your profits and losses will also be in Bitcoin. So if the Bitcoin price is going up and you buy or long Bitcoin, your profits will also be increasing because your profits are in cryptocurrency. So inverse contracts are actually very good to use, particularly in bull markets when prices are generally going up more. So if the price of Bitcoin's going up and you've put a long trade, ideally you want your profits to be in the rising asset price rather than something stable like USDT, which wouldn't have actually moved. Whichever one you use, how you use them is generally the same. So for demonstration purposes, I'll be showing you on USDT Perpetual. So from the menu here, you can select any cryptocurrency you like, and as you'll see, there are literally probably hundreds on Bybit to choose between, but we'll go with the simple one, which of course is Bitcoin. So we'll go Bitcoin USDT Perpetual. So things to know when trading derivatives. So you've got trade and you've got tools. You won't need the tools section for standard derivatives trading. This is when using trading bots and copy trading. I'm going to talk more about that later in the video. So you want to make sure you're in trade. Now you've got two types of leverage you can use. You can use either cross margin or isolated margin. Now, if you've upgraded to a unified trading account, you're only going to see cross. That's one of the features of using a unified trading account, that everything is calculated with all of your cryptocurrency, and it makes things a whole lot easier in my opinion. But if you don't have a unified trading account, I recommend to use isolated margin. That will make sure that your individual trades are treated independently and it's less riskier, let's put it that way. But if you have a unified trading account, cross is obviously the best and only practice to use. So you'll then be able to select the leverage that you want to use. You can choose leverage for Bitcoin between 1 and 100x leverage. I highly do not recommend to use 100x leverage. Very rarely will you need such high leverage. Different trading pairs offer different leverage. So for example, with something more volatile like 𝗕𝗵𝗵 coin, for example, it's not going to allow you 100x leverage. It allows you up to 50x leverage. So depending on the risk of the trading pair, it's going to give you different options. It's generally either maximum of 25, 50, or 100 for the more tradable crypto pairs. So you can select your leverage here. Let's say in this argument's sake, hypothetically speaking, for demonstration purposes, we'll use 10x leverage here. And like where I showed you on spot, if you watch that part of the video, you've got the options of limit market. But on derivatives trading, you've also got the option of conditional trading. So I'll talk through each one of those. So a limit order gives you the option to set a price that you want a trade to be entered at. So you can see, for example, the current price of Bitcoin is $29,900. Well, let's say we only wanted to buy if the price came down to 26,000, just as an example. So under limit here, you would basically put in $26,000. You would set the order quantity, so that's how much you want to use. Now, as things stand, you can see I have an available balance of $2,951, so basically $3,000. Let's say I wanted to use 50% of that, which is going to be approximately $1,500, or in this case $1,280. But because I'm using 12 I'm using 10x, I'm using 10x leverage, the order size is actually going to be 10 times the cost. So it's actually going to be a value, as you can see there, of $12,662. So I'm using $1,280 of my own money, but I'm controlling a $12,500 position. And that's because I'm using 10x leverage margin. If I was to use 100x leverage, well, the value of that trade is going to be 120,000. Just to show you an example here, if I did set that, and again, do not recommend this, it's going to allow me nearly $120,000 of value. So even if the trade goes up 1%, I make 100% profit for every 1%. But the reason you don't necessarily want to use high leverage is because your liquidation price is going to be affected. And I'm going to move on to liquidation and how to work out liquidation in a moment. So I'm going to set it back to 10x leverage. We don't want to be liquidated in a flash because that's what can happen if you use high leverage. And 10x is still considerable. And you can see here my order value 12,662. You're going to want to select post only if you're doing a limit order. And then you can press buy long or sell short, depending on what you want to do. So in this example, I want to buy if the price goes to 26,000. It's going to be situated now in my current orders, and it will only be filled if the price of Bitcoin comes down to $26,000. But that's just a demonstration, so I'm going to cancel that order. And if I wanted to get into the market right now, let's say same premise, 10x, it's a market order. And the value here is giving me about $15,000. I'm only using $1,474 of my own money. And if I wanted to get into that trade right now, I could simply just press buy long and it will enter at the market price. I'll show you, buy long, and it goes straight into position. So now I'm actually in a real live trade. You can see I have a liquidation price of $23,984. What that means is if the price comes beneath that level, I will be liquidated and I will lose this entire value. And as you'll remember, as you'll recall, it's $1,470. So of course you want to protect your liquidation with a stop loss. And again, I'll be moving on to the stop loss liquidation in a moment. Let's finish the order types. So I'm going to close this particular order at a loss, unfortunately, $10 in a loss. The reason why it's moved quite quickly is because I'm leveraged. But you can close it in two different ways. You can close it with a limit order or a market order. If you want to close this order really quickly, use market. If you wanted to set a limit to where the order closes, you can do as well. For example, you can see that I entered at 29,861. Let's say I only want to close it if the price comes back down to break even. So I could set that at 29,861 or even lower, basically, to ensure I make even a small profit, even with the fees included. So I could take that down to maybe 29,800 even, and I could close it in that way and press post only. And by doing that, it's basically going to mean that you have an order come up, but it's basically now put it here in closed P&L. But the positions, I'm just going to close it now with a market order because we don't want that open. So that's limit, that's market. Conditional allows you to put multiple orders in your account. So whether the price goes up or down, you could basically be preparing for all eventualities. And to give you an example of why you may want to do this, you might see a technical pattern, for example, like this kind of rectangle pattern here. You can see the support is at 29,826. Resistance is up here, 31,500. Well, you might only want to sell if the price breaks this level, and you may only want to buy if the price breaks above this level. And by the way, guys, I have many different videos on how to do technical analysis, how to trade. You can check out the link to my playlist down below. Also, as a reminder, at this stage of the video, once again, if you do want to sign up for Bybit, I would appreciate if you use the link in the video description because this isn't a sponsored video. If you do use my link, you'll get a bonus and 0 fees, and I'll get a bonus as well. So links in the video description down below. So yeah, going back into conditional order types, let's say we only wanted to sell short Bitcoin if the price came down to $29,300. So what we could do here, we could set a trigger price of $29,300. We could set the order price as well to $29,300, and quantity, you can do that as you wish. You can set your leverage like I showed you as you wish. And then I can basically have post only, sell short, and it's going to be in my orders, in my current conditional orders. That will only sell if the price of Bitcoin goes down to that level. If it doesn't, it won't short. And I could have done it to a buy order as well, a long, same is to be said. So it's actually a really handy tool. So this next bit is very important. I want to talk about risk management, which in the purpose of this video, we're going to be talking about the liquidation price and using a stop loss. So let's first talk about liquidation price, how you work it out, because this is very important. You do not want to be liquidated. So one way that you can do that, first of all, to make sure that you get a liquidation notification or pop-up window, basically go to this little icon here. It's this settings icon, and basically if you come down to pop-up confirmation windows, just ensure that order confirmation is on. The reason you want to do that is it's going to show you this. When I put any trade on, it's going to give you this example. So I'll do a buy long here, and you'll see that this is the pop-up window you get. So that's why you want to make sure it's on. And the reason you want that is because it will tell you your estimated liquidation price. Now, if you're happy with the liquidation price it's giving you, then fine, put on that trade, but make sure you protect it with a stop loss. So in this example, my liquidation price is at $17,934. So if I wanted to put that trade on, let's say press confirm, just make sure that you add a stop loss to cover that liquidation price. So you'd put your stop loss, as we know it was about 17,900. We could easily put a stop loss of 18,000, press confirm, and that's going to mean we use a stop loss before being liquidated. And of course, you may want your stop loss in a much different place, much nearer to where you've entered. But the important thing to remind yourself of is know your liquidation price and set a stop loss accordingly. Now we understand a bit more about the risk management using a stop loss and understanding the liquidation. It's important to know how you can obviously apply a stop loss and take profit. You can do this, of course, whilst you're in a trade, which I'll show you, but most people prefer to do this when they're putting on their trade. So whether you're using a limit order, market order, or conditional order, you have the option by checking this box here, take profit as stop loss, and you can apply your take profit and stop loss to a trade. So I'll give you an example. Let's say we wanted to enter a market position. We're just going to use 10% of our available balance, and we want to put a take profit and stop loss. So the current price is 29,870. Let's say we wanted to take profit if the price goes to 31,000, and we want to make our stop loss at 30,000 as an example. Okay, so all you need to do is press confirm, and well, it's giving me a warning here. The stop loss price must be lower. Okay, so we'll put it at 29,000, for example. We'll press confirm, and now I also have take profit and stop loss with this order. So if I press buy long, press confirm, it has my take profit and stop loss, and when that position opens, you're going to see it in the take profit and stop loss. If you didn't already set that take profit or stop loss, you can of course add it in this section by simply checking this box, and you can even change it as you go. Again, don't want this trade open, so we'll close that by market. That's how you can set a stop loss and take profit. So the next thing I want to show you is about being a dynamic trader and changing margin in a trade. Sometimes you have a position open, but you want to apply more capital, or you want to apply more leverage or less leverage. Well, let's say you have a trade open. So for example, we'll do a 10% position. We're not going to use any take profit or stop loss in this example, and we're going to buy Bitcoin long at market. So this is for demonstration purposes. I'm not worrying here about liquidation or anything like that. So I've entered my trade and I'm at 10x leverage, as you can see. Let's say I wanted to increase that leverage. Well, you can do that by simply making sure you're in the correct contract, going to leverage here, and simply increasing it or decreasing it. So let's say I wanted to make it 25x. Well, what that's going to do, it's going to change the leverage here, 25x, and it's going to change the total value of the trade. So you can see currently at 25x leverage, $2,866. Well, if I take that leverage way back down to, let's say, 5x leverage, it doesn't change the value, but it will affect the liquidation price. So let me show you with an actual liquidation price here. So let's say we used, well, we'll cancel this order at market. We don't need that. Let's say we put on a 10x leverage trade, okay, confirm, and we press buy Bitcoin market order, and we have a liquidation price here of $17,900. Well, what you can see here, by increasing the leverage, it's going to make your liquidation price much nearer to the current price because you're borrowing more. So look at this. If I change my leverage all the way up to example 50x leverage, well, the liquidation price goes up. If I want my liquidation price to go further away, if you have the margin to do so, you could bring your leverage right down and it's going to decrease the leverage. But in this example, I didn't have enough margin to do so. But if I bring it down to, say, I don't know, 4x, for example, then the liquidation price comes back down again. So basically you can adjust the leverage to free up capital or deploy more capital into a trade. So once again, guys, if you want to give Bybit a go, check out the link down below because it's a bonus link and you'll get these fantastic bonuses and 0 fees for a month. On this video, please share it with a friend, smash the like button, make sure you're subscribed, have the bell turned on for future videos, and feel free to check out any one of these on screen before you go. See you on another video soon. Take care, guys. Bye-bye.